Good evening, all. Ira Epstein with your SPDR ETF market wrap-up. And this wrap-up is for Monday, the 2nd of May, 2022. What a crazy day today. Wow. We're continuing with the stock market break overall, and you see that you tried early on to do that, and you reversed late in the day, closing up with some gains there. You're tonight, early evening, down in the stock indices, but I don't know that that means anything. What we've really done is on the futures markets, you've gone to the lower Bollinger Bands and you held them on that first test again that we made today. Market closed over everything. We'll see what that does. Tonight, we get the Reserve Bank of Australia. Wednesday, we get the U.S. Federal Reserve, and Thursday, the Bank of England, all with monetary policies. So that's going to be in the marketplace. We got to see what we like, don't like, where's that going to carry everything. Market that got hit today, GLD, and it got hit hard. If you looked at the futures, down $50 most of the day per ounce. Why? The combination of fear that these interest rates from the central banks are going to push them up. That's a headwind for the metal market. Plus, we don't have the Chinese consumer out and about yet in Beijing. They're saying things, they're saying they're going to support, but they haven't done too much. And I saw today that the gyms and cinemas were being closed now. So they say one thing, they do another. It's a very difficult situation for the marketplace. I'll continue on for a day or so with PDBC, but I might even take it off tomorrow. I wanted to get today's action, though, on it. I just brought it up last week, so I'll figure out when to do that. You're going to, by the way, hear from me that the live webinar, I'm going to hold one this Thursday, 12:30 p.m. Central Time. It is yours to attend free. Your problem is limited seating, and we fill. And once we're full, you can't get into it, just the way that it works. At any point, you can pick your cursor and lift it up here, and what will happen is you'll see an icon, fill that out, and away you go. If you're on my mailing list, I've already sent the invite. Check your junk mail or your inbox to see if you have it. Otherwise, you're not on my current mailing list, and I do call the mailing list. All right, so as we look at this current action, the market has just been basically, I think, churning. Trading anywhere between up here into the 1950 area, 19 and a quarter, back to the 1779. This is an actively managed exchange-traded commodity fund. We saw a good decline today, big one, in a lot of the grain markets. Farmers are out in the fields. The problem is they're behind on the planting due to the weather in the United States. And there's a question about fertilizer usage. Fertilizer costs have soared. Worldwide, you're going to see it's down dramatically in terms of usage, not in terms of cost. And people are going to say, well, maybe I'll use 80% of what I used last year. Maybe I'll do a third. Depends where you live, how much money you have, and what you're going to get. But generally speaking, you lose less, you get less result. Keep that in the back of your mind. When we look at where the market's fighting its battle, look at the 200-day average, the deep gray, that's dots. Look at the solid red line, that's the 18-day moving average of closes. Now, there's something else happening. You're liable to get right now for tomorrow, if you're up. You could get the 18-day average closing over the 200. Do that, get over 1901, the high of Friday, and you could end up then with a pattern of higher lows, higher highs, a bullish configuration, and you might be headed towards the upper Bollinger Band, which comes in right here at 1937. And I know you're going to tell me, well, Ira, that's not so far away. I get it, but it's what the chart's offering. It's not that I don't see it, but that's what it's doing. Sometimes when you get those, instead of trading X amount of stock, you trade X plus amount of stock. I don't know. You have to decide that. When you look at momentum, it's up. That could kick the trend up, as I said, and that could be an upside target. AMC, as I told you, I think you're trying to make a low now against this lower Bollinger Band. Are you noticing on TV, you're seeing Maverick with Tom Cruise. They're starting to promote it like there's no tomorrow for the May release. Then you'll see there's other Jurassic Park and the other big boys are all getting ready to release. So we could see where this market starts running out of downside momentum. It is embedded. The pros are short. I think that if you can get up and over, right here, Friday's high be the first warning sign, if you got over 1605, that the market might be ready to get a challenge going back to the 18-day average of closes. And if it catches on fire, then the next big resistance points are up here. But, there's a huge but. Until that red line closes over 21, the bears have control, and they'll be aggressive in their short selling, I think, until that happens. Apple, if you'll notice, had lost an embedded reading. This is when the market, and if you count with me here, you've got these markets. 1, come on, 2, 3. You've got your embedded readings. You've had it for a while, and you haven't lost it at this point in time at all. So here's your bounce coming in the market. You come down to the lower Bollinger Band again, still in an oversold condition. And what I told my morning subscribers was, I think the pros are going to cover. This is how the market looked to me coming into today. And this morning at 9 o'clock when I began recording, I think it was 10 minutes to 9 when I actually began today, it was right in that zone. I'm looking at the market going, I'd be surprised if you're not going to see some support there. The resistance tomorrow will be the 200-day average, and it's a hard walk up all the way back to 164.81. I'm not saying it's going there. I'm saying I think the pros got out of shorts today. That is what I'm saying. When I look at Disney, what a free fall this market has had. It doesn't help that they still haven't resolved their issue with Mr. DeSantis, Governor DeSantis in Florida. That is a big problem for them. They've got the problem of an overhang with their Apple TV, just like Netflix does. So a lot of things working against it, but the positives are the kids will be out of school soon. Airplane travel's picked up, but I got to tell you, it's going to cost a lot of money. It's going to cost a lot of money in the parks when you get there, your hotel rooms. Is that weighing on the market that it's going to be too expensive? Don't know. When you come to XLF, the financial sector, higher high, lower low, there's nothing to like here. The government is determined to slow the economy down. What more do you have to hear? That's what you do to tame inflation. And that's what they're going to do. Now, could inflation have peaked already and they don't have to do everything they said? Of course. We don't know. You know after the fact. Everybody can make a guess. Oh, I think it just did it. I'm watching TV, and for every analyst that says they think it's happening now, I have another analyst that said, no, I don't see that happening yet. We wait. Let the market tell us. Right now you have what we call a gorilla glue trade, just like that famous glue. The market hits the Bollinger Band and just doesn't get away from it. And when that latches in with an embedded reading until the party's over, it ain't over. So you need the red line to close over 21 to be the indication the party's over. Until then, good rallies, as long as that red line stays under 20. I think they'll be sold, with the market still looking to see how deep is deep on the break. The industrial sector is also one of these gorilla glue trades. It locked in, and it's trying to force the embedded reading. Now, let me walk you here. Not embedded on this day. You have one of the numbers with a 20, and that was Thursday, the 28th. Friday, both numbers did embed, first day of it. Today, both numbers are there. So tomorrow's a very important day. You either embed or you don't. The market generally doesn't embed. It fights battles to not do that, so I would expect you're going to try to see an update tomorrow in the market. In the semiconductors, be careful here. You lost the embedded reading. I don't want to be short anymore after that as a market analyst. So as an analyst, I look at that and I go, I think you're going back to the 18-day average of closes. If you haven't learned how to work with Bollinger Bands and stochastics, I have a course called Enhanced Bollinger Bands on our website, www.iraepstein.com. I give a full explanation of what the course does and everything else there. Just go under the word education when you get there. That's where it's located. All right, but the resistance, as I see it, the 18-day average of closes, you get up there after you lose the reading. It's still fighting a battle. If it can close over 180.34, that is the high, if I'm correct, of Friday, well, that could be the first sign, a close over that. Higher lows, higher highs over the 18-day average, momentum up, all signals go. I think the pros would put stops then under these current lows, and they'd look for wherever that Bollinger Band comes in as the first upside target. In the home builders, pretty dangerous to want to do anything just here, yet the chart action's friendly, near term. Why? Do you disagree with higher lows, higher highs? Yes, you're caught in the Bollinger Bands, probably not coming out of here for a while, but the near-term action is friendly. Maybe you get back up there. This market is fighting hard. The factors that we have few homes for sale, numbers are down, interest rates are way up. People are getting clever. They're saying, hey, on my closing costs, don't roll them into my mortgage. I'll pay them out of the cash I have. That keeps the rate down, what you're paying, not rate, but what you're paying in a gross amount. They're changing deals that they're making on their mortgages. Where are they on it? Some people buying new homes are forcing the contractor to lock them in with an interest rate to buy that home. There's many things that are going on. This is not the first time or the first rodeo for this type of market. And a lot of people understand it. It's the young people that have to learn it. So look for the guys with gray hair. We've been through it. So I'd be looking right up there for the potential. Could it get there? But I don't see a big trade out of the market. I see a trade, and that's about it. In the energy sector, the big battles, the 18-day average of closes, what's it going to do? Germany today announced that they are prepared to vote to ban the buying of oil by Eurozone members. So that's it. They'll keep their natural gas, but they've crossed the line that they're ready to go. The atrocities are just terrible out of Germany, and you're getting to that point where that's going on. The U.S., in the meantime, has become a net exporter of oil. We did that in the month of April. We swung completely around. Problem is we're not going anywhere with the numbers. They're not going to get very big, and that's because we don't have enough production. Even when you start hearing in the Gulf of Mexico, we have these new oil rigs coming on. What you won't hear is that the other rigs that are there, their production has been falling away. The wells where they're dug in are being depleted. So these new ones will make up that difference. It's not that big of a net difference, so be careful there. To get bullish again on the energy, you need to get a close over 77.54. If that occurs, then I'm targeting 82.04. I don't see anything right here yet. Gold. You went through the 100-day average like it didn't even exist today, and you closed under everything. You either bounce or the next objective is 171.31. As I said, when the market was up here, what a disappointing market. Gold can't hold the rally from war in Europe. It can't hold the inflation rally. It's a difficult market. That's not to say it's not been up to $2,000 an ounce. Let's not play it down. It's doing its job, but you're not getting the runaway, the spectacular moves that, catches one's fantasy in the headlines. Just not getting that. GDX, well, if gold's got a problem, this is going to have a problem, and that's what you're seeing right now. And you're starting to embed the reading. I'm getting more bearish, not bullish. Yeah, you heard me, more bearish. Copper, same issue with China. Until you get the factories going, any copper is too much copper. Any oil there is too much oil. I mean, just the way that it is. You need things to hum. They're not humming. They're standing still because of COVID. And that is a big problem. We're going to see some numbers coming out of China. I think in their first quarter GDP going to come out soon. The way they do it, their numbers are a little crazy, but their timing of it all. But I'm expecting a decline there. We'll see if I'm right or wrong. TLT, short cover area. Why not? In front of the FOMC meeting, we all know they're going to raise rates. Who doesn't think the Fed's not going to raise rates 50 basis points? You're in the major minority if you do that. They're going to talk to you about what they're going to do with the balance sheet. They're probably going to sit here and take off, I don't know, 100 billion a month or whatever. They're trying to get down to 1.6 trillion probably by a year and a half from now, end of next year. Wouldn't surprise me that that is their goal. We'll see. What do you think taking down 1.6 trillion does in terms of interest rates? I read the study this weekend. It equates to 0.15 to 0.20 basis points. In other words, we swing more in the futures markets daily than all that does to the marketplace. So when they tell you, oh, that's going to add to the interest rate, sure. UUP, higher lows, higher highs, just a powerhouse, and it's classic. It doesn't stay over the upper Bollinger Band. It gives you the opportunity to come in on the breaks and pop out against that band. Again, ranges are narrow, so you trade a bit bigger. That's the concept there. And the same thing's true in FXE. Bearish embedded reading, it's the flip-flop of that. Want to remind you of something? The webinar, Thursday, 12:30 p.m. Central Time. Take your cursor, move it up here right now. You'll see the icon pop. Click on it, sign up. I'm Ira Epstein. I'll see you tomorrow.